Hello, traders and investors. I'm L.A. Little. This is your daily Neoclassical TA wrap. We take a look at these markets. We do it from a neoclassical perspective. We're using a model that I built a decade ago, traded through the 2008 crash, made money, 6% that year, made money since. It's a model that works in all kinds of markets. And if you're wondering why you can't seem to make things work, it's because the market changes, right? The market isn't the same all the time. It has different phases that it goes through. And those tools that you use in the classical set, like say an oscillator, it works great in some situations and it works horrible in others. And unless you could recognize which one you're in, you're going to have trouble. One of the things about the neoclassical model that doesn't exist in almost any of the classical structures is that it takes time into account, right? And that is a big thing because it gives you an advantage. As I talked about, I believe last night, when we were looking at the MTTFs for the indexes, we knew that April, May was going to be a tough period. And that's exactly what's happening. And we knew that back in December. You can forecast, where things are going to have troubles. And, that's a big advantage because it allows you to know when that market's changing on you. I do this show 4 times a week, Monday through Thursday. It's broadcast every 10 o'clock Eastern Time, archived on YouTube and under the channel LA Little. If you want to subscribe, you just have to reach out up on the right-hand corner. Just hit the subscribe button anytime I push public content. Whether it be this show or other videos, you'll get a notification. As far as what these markets did today, they're stalled. They're really struggling, and they're right on the verge of trying to break down. And we'll look at that here in a second. 0.4% on the two indexes, NDX, GSPC, 1.25 or 29 actually on the Russell. Russell took the brunt of it today. Remember yesterday, the Russell was up almost 1%, flopping back and forth, 0.5% on the NASDAQ. Gold, silver, they get a nice spike. Oil was down today. The bonds lift again. And the bonds we're going to take a look at tonight because the bonds, my friends, are breaking out. And it may or may not be what you think. We'll talk about that as we go through the show here. Let's look at the charts. Let's start with the S&P and see what we got. So S&P 500, if we look at that. So what do we have? I've been talking about this long enough that you probably know what it is, which means it's probably going to break here at some point, right? And that is this area. That area is the range. That's where it's been trading. It got under it, right back into it here on this bar. Travels up, you sell towards the top, you buy towards the bottom. That's how ranges play, and that's what this one's been doing. The problem is as you go out in time, eventually that range is going to break. It's not going to hold forever. And so the question is are we at that point where this range is going to break? We're already in a downtrend. You can see that here. That's telling you it's a downtrend, that arrow to the downside. And where's it going to try to go if it breaks to the downside? And I've been saying for a long time to members, and I believe I've mentioned it here, this is the area that you have to expect it to come back to. That's the retest, regenerate zone. And that particular zone has been much more than 6 bars. Well, why is that important? Well, when you break out, if you go more than 6 bars, your probability of it getting bought the first time back is pretty high, very high actually. And so if this thing does make the run down into this area, that's going to be where this market's going to get bought. And if you're looking at this market and you're struggling with it, if you've got most of your money invested, which I'm sure quite a few people do when I look at the numbers, they're going to struggle, right? Because as it gets down in that area, they're going to be forced to sell probably because they're going to be so far underwater and they're going to be fearful. The market works on fear. It works on greed. You have to try and prepare for those situations. Are we going to go down there right away? Actually, I think we're not. I think it's probably going to hold and get another bounce. But I do think that range is going to expand to the downside at some point, and that is what you have to be aware of. If it happens tomorrow, well, it happens tomorrow. We've got a Good Friday off. You got the bank earnings in the morning. There's a lot of things here that can turn it, and those banks have been struggling, so that may be something that takes place tomorrow. NASDAQ's in that big range. One of the reasons I say I don't think it's going to happen yet is because this one is probably going to get bought at the bottom of the range, and that's not that far away. So maybe you get that push down elsewhere, and this one just comes down and gets bought at the range. And if you go to the NDX, you've got the same story. Also, the bottom of the range is down in that area. And finally, if you go to the Russell also has had that same situation. Now, the Russell actually is the weakest. And the Russell is got this range up here that it's trying to hold on to. And I pointed that out last night. That's the key area for it. It's that swing point low you see, that L that you see on your screen. That's a swing point low. You break that, you're going to double that range to the downside. If I take and copy that down, move it down, and you look at it, where does it come to? Oh, isn't that glorious? Right to where you would think people might want to buy it. And if it's not there, it's going to be the test of that swing point high. Now, they'll tell you in classical technical analysis that this is a head and shoulders, right? And it may very well be one. Well, what does it tell you? Well, it tells you what we just told you, and that is that it's going to take the top and the bottom. It just expands the range a little bit and says that thing should complete to the downside, right? Which does what? Brings you right back to that same area into that swing point high. And so, if you're looking for the buy is going to be down here. If you're wanting to know if it's going to take, well, what happens in Neoclassical? If you break this swing point, you're breaking it on multiple time frames, you're going to get a faster move to the downside, which is going to take you to that area. So you have to be aware of that. You got to have some dry powder if, in fact, you get there. If you like what you see on this show, why don't you share it with someone? There's plenty of share buttons on YouTube. All you got to do is hit one, share it on your to friends if you want, share it on your Facebook, share it wherever you want. I'd love for you to do that. If you like what I do for you, I would appreciate you helping me. As far as the rest of the market, let's go to some of those other things we're talking about. Let's go to the currencies to start with. So Trump started trying to talk the dollar down today, so the dollar takes a hit. When it took a hit, that shot gold up. Gold took a nice spike, dollar took a nice spike to the downside. That's just coming back. Now, actually, let's analyze this chart real quickly together. You had a bearish retest regenerate here. You had another one there. The dollar got over both of them, right? And so now it comes barreling back down to the downside. But there's no swing point lows to test now until you get down to here. And so the next test are these two if it comes all the way down there. But the fact that it came all the way up this high says that more than likely this dollar is not going to continue this downtrend. More than likely it's going to find support in here, maybe in this area, maybe off this bar, this wide price spread bar. I'm not sure exactly where it's going to find it. There's not great tells on this particular chart, but you do have this gap area in here, and it's going to probably go sideways, at least for a while, this time frame. Now, if you look at it on the weekly's been building out this large range, and that range keeps testing. There actually was a swing point high over here off the chart, a big bar. It keeps testing that area. This is the area it's been testing. We'll see if it gets down to this swing point low and can break it. If it breaks that one's 25.70. If we go back to the daily chart and pick that one back up, 25.70 is this area that I was talking about, which is this swing point low over here. So I do think that if we see this come to the downside and we see it break those two, we could get a faster move to the downside. But my suspicion is he's not going to be able to talk it down just yet. I think the most worrisome thing is the yen, because the yen typically goes counter to the equity markets. And this yen has a huge ABCD structure to the upside. And that push that's taking place, it's already over the B point. That push is taking place, if you look at it on a weekly, has a good piece to go. I would look at this bar over here, which is about, 89.85. That's another $1.40 on the upside, which is a pretty good move for the currencies. That also would probably complete this ABCD structure that's here as well. It goes about right there. So the yen is more of a problem that could facilitate more selling. which brings me to the debt instruments. Let's go look at the bonds. If I look at the bonds and I pull up the TLT, what you see on this chart is a breakout as well. And it breaks out not one, but it breaks out multiple swing points on the daily time frame. You see them here. All of these got taken out. One fatal swoop, volume comes in, and it extends today. And if you're bullish, that's exactly what you want to see. That says money is moving to safety, folks. It's wanting something safer. Now, sometimes it doesn't mean that. Sometimes it means something else. This is your ABCD structure here. What it means sometimes is that we actually have something other than a little fear. And that can happen when we actually see bonds like, say, junk bonds start to sell off. Well, these are not selling off. They're still holding towards the highs. If we look at, say, high-quality corp bonds, those also are not selling off. Those are moving back up. And so those other instruments tells me this is simply reaching for something safer when the market is turbulent as it is now. And that's also evident in the VIX if you look at the VIX. Finally, if we look at the sectors, some of these sectors got hit pretty hard today. The SOX had already broke yesterday sideways. Tonight, it's going after this swing point low. Touches into it, has a little bit more volume that says it's probably going to test it again tomorrow. The financials I've talked about already, that's going to be the big one tomorrow. You've got two or three. You've got actually 3 in the morning that are reporting. This one is set up to break out swing point lows if they disappoint. Now, if they don't disappoint, you're going to get a nice bounce out of this. But if they disappoint, you're going to break here and you're going to break on the weekly potentially. That can lead to a faster move to the downside. So this market is set up on the edge of the cliff, right? It's looking over the cliff and it's asking itself, is it time to jump? And as we all know, the market typically doesn't jump. It usually goes the opposite way. Everybody is starting to talk about it's going to jump, it's going to jump. That's usually when I get a little fearful of the fact that it probably won't jump because everybody thinks it is. We'll see how it plays out. I think if you're trading, you should have some powder dry in case you get these breaks, because if you get those breaks, remember, you had some big spikes on the way up. Those are going to be some nice buy areas on this weekly time frame if we get there. That's it for tonight. Again, share this with others. Tell them what we do here. I'm LA. This is and was your daily NeoTA wrap. Have yourself a great one. I'll see you tomorrow. Good night.